Welcome back to another episode of Anatomy of a Trade. Today, together with Franz, we are going to update you on gold. Gold is a very interesting spot, so I think the update here is quite timely. All right, well, Franz, give us your view on gold. You've been trading gold for quite some time and quite successfully. You caught this big move up. So how do you see it now?
Here we're looking at just a very small piece of the overall picture, but the major sign of strength that we're showing for gold is a new all-time high for the move. And if you compare that to some other assets, stock market, for example, hasn't gotten there yet. So gold, it's a different animal, but it's making new all-time highs, at least, for the move, and it's, showing strength, showing relative strength versus other asset classes at the moment. What we're looking at.
Yeah, anything specific on this chart that tells you that this is a bullish chart?
A couple things. First of all, even though the volume, the supply coming in looks rather pronounced through this trading range, if we back up and look at a larger trading range, this is actually lower for quite some time than what we've seen previously across the larger trading range that this backing up action came out of. So I find that to be bullish. I also see the downswings that are being kind of highlighted by the beige colored lines and then the little trading range there at the end. I see them becoming less and producing actually slightly higher lows at each one, even though it's not, overly obvious. I know some people would say, well, you're making lower highs too, which is the case, and it's sort of a classic apex formation or hinge that the entire formation is coming into. So the question for any trader is, the apex is not going to last, and price is going to emerge one direction or the other. Which way is it going to go? And my bias is bullish at this point, just because the result versus the effort that we're seeing indicates that there's supply. There's an attempt to keep pushing down on price, and it's not having the desired effect. So I know other people might be thinking, well, demand is not significant enough to move out to the upside, but in a trading range, it's more typically it's more significant that we see what's happening with supply, because we need to get that absorbed before price is able to move freely in the up direction if we're bulls. Mm-hmm. Correct me if I'm wrong, but certainly that's the way I look at it.
Well, I think this is great analysis right here. So I'm not going to add anything. So let's go forward with this, and then at the end of the video, I'll present, my view on this, and how I'm interpreting this, and so on and so forth. We actually have in the Wyckoff trading course, which is called the practicum, the second part, anatomy of the trade segment. So this means, this is a group assignment where everybody in the class are analyzing the same stock or the same instrument, and our students pick gold, and we are trading it throughout the semester. So this is just a very interesting exercise because you usually get such a beautiful diversity of analyses from different students. So let's look at this. This comes from
look at this.
yeah, it's just so freakishly beautiful. And Nick starts, his analysis back in 2011 into the climactic high. Everything is, labeled here. Climactic run, change of behavior, TP formation into the apex, then resolution of that apex, downslope and trading range. That kind of reminds me even of the, our market structure that we have
Mhm.
had just most recently. First move up, relative to that structure, gold is a little bit weaker, but still, there are quite a few interesting things here. This reaction had quite a lot of supply, suggested that we're going to have some kind of retest of that. The character of the next reaction is much more bullish. There is less supply, the spread is diminishing, and it's a higher low. And then the next reaction is absolutely flat, and the supply has contracted so much. So this defined not only the buys but also the timing when the price is going to start running away. And then we are in the established uptrend. There is nothing really here that's going on. And we are at a very interesting spot with the COVID-19 reaction. So gold was for sale, gold was for source of funding type of asset, and therefore we have a lot of selling and a lot of buying at the same time. So at the end of the video, I'm going to show you the pattern of why this is still bullish and how this could resolve itself in which way. But meanwhile, just enjoy this work by Nick, and I would even stop the video here, guys, and just go through this chart point by point and just see, whether you agree with Nick or not. Here's another work by a student, Rob, and is talking about different PNF counts, and he's taken this area right here, which, by the way, has quite a lot of years in it. So
Mhm.
there is a little bit more of the technical discussion here as to the size of the box that we had at that time. So we should be wary about this, but look at the targets, 2600, 2500. So this would overcome an all-time high. And I've shown you guys, the PNF counts on gold almost a year ago that go above 1800 and 1900 that go into 2000, and then there are even higher counts. So we'll have to consider that. And also a very interesting piece, again, just stop the video and just read this as to how in 2008, 2009, analog suggested, another potential retest. Well, structurally, I think that COVID-19 reaction was just so rapid, and then the recovery is so rapid as well. So therefore, if we coincide how gold behaved, I'm kind of seeing the same structure here. And Franz, um, uh, I wonder what you're going to think about this. So this source of funding is here in 2008, 2009, and we had
Yep.
the source of funding on the intraday basis in gold. So intraday structure and 2008, 2009, gold structure here is kind of similar. And the source of funding happens at the same structural spot. It's just that the time frame is different. And then look at what happens next. A very quick rally up, something that we've had in gold into the 16, 1700s, and then an apex formation. And we are resting at the higher level, and then we start advancing. So that is suggestive of the continuation right now in gold. Padre, brought us a very interesting intraday work. He is an intraday trader, so always very interesting, labeling that he has. Although some of this, I probably would correct a little bit, but this is just the work that we as Wyckoffans would do, looking at the structure, trying to figure out, where do we have different type of Wyckoff events, Wyckoff actions, like stop in action, sign of weaknesses, signs of strength, up thrusts, sprints, and so on and so forth. Jim has presented, an overall picture, which is always great because this is exactly the analysis that you want to do. You want to go through first a long-term picture, look at the whole trading range in the relationship where we are. On the long-term picture, I want to, point your attention to this low on the COVID reaction. It comes exactly to the support that was before the resistance and that was created in phase A back in 2013. How uncanny is that? And also
Mm-hmm.
retesting the low in 2019. And then on the daily, again, we're talking about this source of funding, quick rally up, then consolidation, horizontal consolidation at the higher level, suggesting higher prices. And then on the PNF count, again, we're looking at the 2600, 2500. So overcoming the all-time high and then, going into a higher objective and consolidating there. Franz, something that I want, to mention and, I want to ask you, you were a moderator on our forum on the wyckoffanalytics.com. By the way, go guys check it out. Franz is doing such a tremendous job, conversing with people, and there are quite a few traders that are submitting their analysis and their Wyckoff analysis. So this is an
And why,
example of
excuse me
this
one
discussion.
second. And while you're there, check out the rest of the website because it's just chock full of Wyckoff, uh, just Wyckoff inspiration, Wyckoff learning uh, information. It's a great website.
Okay, great. Yeah, absolutely. Go check it out. We have quite a lot of stuff that is free, or anything that you want to sign up for, any classes, you are welcome to. So, Franz, please give us, your perspective here on this chart or this conversation that you had with this particular participant, Humble Trader.
Okay, Humble Trader is he's in Vietnam, so he's on the other side of the earth, on the other side of the world. But he's also interested in gold. He's trading the gold futures, and he's looking at it very interestingly in this chart from three different perspectives. He's looking at daily view, which is the top left hand, and you can see across there sort of the major trading range that Roman's already talked about. And where we are right now is in what appears to be a backing up action from the most recent action. Then he's also showing I believe it's a 4-hour chart, which is the chart to the right, and that is just the backing up action itself, and it's showing the apex formation that's happening. It's showing the interplay of supply and demand across this range and the effect that that's having on price. And then the final chart that he's showing is the bottom one to the left hand corner, lower left hand corner, and that is a 30-minute chart, which is just the most recent little move up at the end of this rally, which to me, the way I'm reading it is that we had a phase C, an initial LPS where a lot of volume came out. You can see those volume spikes about halfway through the middle of the 30-minute chart there, and yeah, a lot of relative ease of movement coming down. So that's going to have to be tested, even if it's an LPS. And we see price then begin to rally. And the question is, how is the test? Is the test going to be successful? And is that going to present us with another LPS that will give us the kind of the springboard to move up from? So that's been the discussion that Humble Trader and I have been having, going back and forth, and trying to use our Wyckoff skills to read, to look around the corner and see what's going to happen next.
All right, well, Franz, really great discussion. First of all, thank you, for maintaining the forums, for maintaining the conversation. So guys, for those of you who would like to have this type of conversation, with charts on, where you're discussing all of the points, go to our forums. And under Francis' guidance, you definitely have that discussion. All right. I want to show you something from the Wyckoff trading course. I usually, prefer, to keep it kind of like in the course, but this is very relevant. Um, Absorption of the supply, how it happens, two ways: horizontal absorption and vertical absorption. So horizontal absorption is going to go through the trading range, and sometimes I call it absorption through time. It requires some time to go and consolidate, to test many times the same level, and we could see the increase of the supply and then decrease of the supply. So it's into the decrease of the supply that area we're going to say that yes, we are there in terms of the shares being absorbed. But the vertical absorption might look a little bit different. Vertical absorption in some cases are going to look as if this is a change of character, at least the beginning of it. This is where supply is increasing, and it could produce a relatively significant reaction. Now, if this is absorption, that increase of the supply needs to be dealt with the presence of the demand. So demand should increase on the way down, and demand should increase or stay at least elevated on the way up. So what it does is it absorbs the supply both on the way down and on the way up. And as this absorption is complete, we need to go into the testing. And this testing usually will happen at the higher level in the area where the initial selling has taken place. Here's another kind of mini representation of this, where supply increases, demand increases as well. Demand increases, pushes the price up, and then the test happens at the higher level. So in a way, this is what I'm seeing currently in gold as well. And it's very interesting how this was so obscure, this sign of weakness, because if we would take out this area right here and would say like, okay, well, destruction never happened here, and we had maybe something like this would be the trading range, and it would be very easy to decipher, and we probably would be thinking that this is phase C, which is truly should be phase C, and then this was phase A, phase B, and then currently we're in phase D after the major sign of strength and after the backing up action, which goes into the apex formation and suggests that there's gonna be acceleration on the way up out of this formation. So absorption on the way up happens and being preceded by the absorption on the way down. So we see in the volume signature how on the way down there is a lot of selling based on the source of funding at the time of the market reaction. Market participants had to sell to get cash in order for them to close some of the margin calls, in order for them to rebalance their portfolios, and just to hoard cash at that point. And all asset classes were for sale, including gold. And then as someone else is buying, the smart money is buying gold at these levels, there is also buying on the way up, and that produces one of the best rallies in gold in the recent years on the intraday basis. And once we've done that, the key to the vertical absorption is the ability of the price to stay above this level or at the same level and kind of consolidate before a continuation. So that's kind of like the view here on gold. Franz, any other final thoughts that you have to conclude this segment of the anatomy of the trade?
Just thank you so much for that review and explanation of absorption, vertical absorption. That was just great stuff.
All right.
So, yeah.
Great. Well, go check out the forums where discussion is right now on gold. And yeah, go check out the website as well. We're gonna talk about something else in the next episode. And as always, if you have any trades that you would like us to discuss, your trades, send us those with your annotations, and we'll be happy to look at this. Thank you so much, guys, and we'll see you next week.